Hello, welcome to FIT's Fall Orientation, Knowing Your Loan session. My name is Teresa Hewitt. I work in financial aid services and manage the student loan program here at FIT. During this session, I hope to help you learn more about education loans and how they might fit into your future at FIT. One question that many students don't even know to ask is, what are student loans? Low-interest federal Stafford and PLUS loans are federal financial aid. To be eligible for these low-interest loans, you must complete a FAFSA, a free application for federal student aid. We do often get questions about what is covered by financial aid, including education loans. So, can you use your loans to cover tuition and college fees? Of course. Food, both a meal planned and off campus? Yes. Dorm or reasonable rent while taking classes? Of course. Books and supplies? Yes. Transportation to and from FIT? Yes again. Personal expenses? Yes, even personal expenses. Your financial aid can be used for any reasonable expense incurred due to attending FIT. Yes. The next thing I would like to do is to make sure that we are speaking the same language. So I am going to take just a few minutes to go through some loan vocabulary. Principal is the amount of money that you borrow. Every year that you take out a new loan, the total amount of your principal increases. Paying interest is paying for the privilege of using someone else's money. Why? Because while you are using the funds, the lender cannot invest it. There are two basic kinds of interest. There is a fixed interest rate, which never changes from the time you borrow the funds. Federal loans have a fixed interest rate. A variable interest rate may, and usually does, change as the economy changes. Lenders of private student loans often offer loans with both fixed or variable interest rates. There are two requirements that you must complete before your federal Stafford loan will disperse. One requirement is a Stafford entrance counseling session. The federal government realizes that this is probably the first loan you have ever had, so they go into detail about your rights and responsibilities as a borrower. The entrance counseling session may be done online at studentaid.gov, that's G-O-V. All education loans, both federal and private, require promissory notes. These are documents that you sign stating that you understand that you are taking out a loan and promise to repay it. Federal loans have a master promissory note, or MPN, which covers all Stafford loans borrowed for up to 10 consecutive years. You may complete your Stafford or PLUS loan MPN online at studentaid.gov. Private student loans usually require a promissory note for each new loan. The lender is the organization that is providing the money. For federal education loans, the lender is the Department of Education. Lenders often have servicers who answer questions, take care of any paperwork, and follow up on your payments. Do not be afraid to contact your servicer anytime that you have a question about your loans. They are there to help. A federal servicer will be randomly chosen for you after your first Stafford or PLUS loan disperses. Unlike many other kinds of loans, education loans give you an option to either begin repaying your loan while you are still going to school or wait until after you graduate. For many student loans, there is also an optional grace period, a time period after you graduate or drop below 6 credits, during which you still do not have to begin repayment. This one-time grace period is 6 months for federal and many private student loans. This grace period provides you with some time to find a job and decide what payment plan you want to use. The federal government and some private education lenders charge an origination fee to help cover the costs of processing your loan. Since this means that FIT will receive less money than you request, it is important to remember to borrow a little bit more in order to have the amount you need come to FIT. We will begin discussing federal education loans by starting with Stafford loans, since most students who are eligible for federal student aid are eligible for this type of loan. Stafford loans are in the student's name and do not require a credit check. The interest rate for loans dispersed in the academic year 2020 to 2021 is a low fixed rate of 2.75%. The interest rate for graduate students is 4.30 fixed. The origination fee for Stafford loans is 1.059% through September 30th. There are two types of Stafford loans. There is a subsidized Stafford loan where the government pays the interest on this type of loan while you are taking at least 6 credits per semester. Not everyone is eligible for a subsidized loan because the eligibility is based on your EFC from your FAFSA, your cost of attendance, and how much you have already borrowed. There is a yearly maximum that you may borrow based on your grade level, and also a 3-year window of eligibility while you are in your associate degree, and another 3-year window of eligibility while you are in your bachelor's degree. The other kind of Stafford loan is unsubsidized. The interest for this type of loan accrues or adds up from the time the loan is dispersed into your FIT account. We suggest that you try to pay at least some of the interest before you graduate. The interest still on your account when you graduate will be changed into principal. This means that you will be paying interest on your interest. To keep track of your interest, sign up for interest statements. These are not bills, and you are not required to pay the interest while you are enrolled in at least 6 credits per semester. For undergraduate students, you may be offered both subsidized and unsubsidized loans, or only unsubsidized loans, depending on your eligibility. Graduate students are only eligible for unsubsidized loans. Repayment begins for both types of Stafford loans when you graduate or drop below 6 credits in a semester. Here is your answer to how much Stafford loan can I borrow this year? You can see by the amounts in the table below that the yearly amount you may receive depends on what grade you are in and whether you are a dependent or independent student by the government standards. A dependent student is any student who is younger than 24, even if they work and live on their own. Your dependency status is based on your answers on the FAFSA. If you have reason to believe that you have extenuating circumstances and should be considered independent, please email us. Each year, you will be offered the freshman loan amount listed until you have completed 30 or more credits toward your associate degree or reach the maximum total. Once you have 30 or more credits toward your degree, you will be offered the sophomore amount listed until you graduate from your associate degree or again, reach the maximum total. Once you are admitted into your bachelor program, you will be offered the amount listed again until you graduate or reach the maximum loan total. Graduate students may borrow up to $20,500 per year in unsubsidized Stafford loans. What if you need more money? If a dependent student needs additional help to pay for their education, a parent of the dependent student may apply for a federal Parent Plus loan. The application is available on studentaid.gov. Eligibility requires passing a credit check. We suggest that you take out the loan for both the fall 2020 and spring 2021 semesters, just in case your credit situation changes. You may reduce or cancel your loan by contacting us. The parent will need to complete a Parent Plus Master Promissory Note, or MPN. For a federal Parent Plus loan, the parent is the borrower and the loan will be in the parent's name. The fixed interest rate for 2021 is 5.3%. The origination fee for the same academic year is 4.236% through September 30th. To be eligible, the parent must pass a credit check. But if they do not pass the credit check, they may either ask for someone to endorse their loan or appeal the decision if they think that it was based on out-of-date information. If neither of these options work, the student may request additional Stafford unsubsidized loan up to $4,000 if they are in the associate program, or $5,000 if they are in the bachelor program. When applying for the PLUS loan, the parent may choose to begin repayment immediately or request an in-school deferment so that they can wait to begin repayment until after the student graduates or drops below 6 credits per semester. There is also a federal Graduate PLUS loan for graduate students who need additional funds. Again, the application is at studentaid.gov. So, how can you keep getting federal loans? First, you must complete a new FAFSA every year. FYI, next year's FAFSA will be available on October 1st. Add a reminder to your calendar. The student must also remain in a degree program. If the student is academically dismissed, they will not be eligible for either federal or state aid. The student must be enrolled in at least 6 credits toward their degree per semester. Unfortunately, minor courses may not count as a course toward their degree for federal aid purposes, so make sure to check. The student must also be making progress toward their degree by completing at least 2/3 of their classes each semester with a minimum grade point average of 2.0. About a month after your loan disperses, your servicer will contact you via your email or regular mail to introduce themselves. Here is a list of federal loan servicers. Note that you will usually see their names listed as direct loan / name of the servicer. Please feel free to contact us if you believe someone may be trying to scam you. If you do not plan on keeping documentation that contains your personal information, please remember to shred or delete the document. Another option for both dependent and independent students is a private or alternative loan. This type of loan also requires a credit check. This may be a good option if you have good credit or a cosigner with good credit. We suggest that you take out the loan for both the fall and spring semesters, just in case your credit situation changes. You may reduce or cancel your loan by contacting us or your lender. These loans may be through banks or credit unions. Depending on the lender, the borrower may be the student, a parent, or just a really good friend. Some lenders also have loans available for international students if they have a U.S. citizen as a cosigner. This type of loan may have fixed and/or variable interest rate options. We suggest that you choose the fixed rate if you think you will need to take the full repayment period to pay off your loan, because the interest rates are relatively low right now, but could increase in the future. For this loan, you'll need a good credit score or a cosigner with a good credit score. The better your credit or your cosigner's credit, the lower your interest rate. Shop around. Our private loan page on fitnyc.edu has a link to Fast Choice, which has a list of lenders that FIT students have used in the last 5 years. This list is for those that need assistance in choosing a lender. You are not limited to the lenders on this list. We also have put together a list of questions to ask lenders and a comparison form that you may download to help you in the comparison process. Private lenders may have a few payment options. Some lenders allow you to either immediately make full monthly payments, or make interest-only payments until graduation, or defer making payments until after you graduate. Many, but not all lenders also have a 6-month grace period. Review your payment options and grace period with your lender. So, when does FIT receive this money? An education loan is usually applied to your bill within a few days after being accepted, or in the case of a PLUS or private student loan, when they have been added to your financial aid. All loan requirements must be completed. Entrance counseling, master promissory notes, PLUS counseling, any requirement must be completed before the loan will disperse. You need to be taking at least 6 credits toward your degree, but new students who are offered financial aid are offered aid based on the assumption that they will be enrolled full-time, taking 12 credits per semester. If you will be taking less than 12 credits, please contact our office so that we can let you know how your enrollment may affect your financial aid. Just as an aside, state grants usually don't come in until a couple months into the semester. Once we have confirmed everything, your funds will go into your FIT account. So when do you receive the money? If you are depending on financial aid to pay for items like rents or books and supplies, the first thing I must tell you is bring enough funds to cover your first month to month-and-a-half expenses. Why is that necessary? Well, financial aid is based on full-time enrollment. If you enroll for less than 12 credits toward your degree, you may lose some of your financial aid. Therefore, we wait to give you your credit refund until after add-drop week when your enrollment is stable, so that we can determine your correct financial aid eligibility. We do have an emergency fund from which students may borrow a small amount in an emergency if they are expecting a credit refund for the semester. The amount borrowed will be subtracted from their total refund. To receive your refund, you may sign up for e-refunds. This allows FIT to electronically transfer any credit to your checking or savings account. Or you may pick up a paper check from the bursar's office once your refund is processed. Please create your FIT budget before you start spending your refund money. Creating a budget involves determining your income, how much money you will have available to spend, and your expenses, the items that you will need to buy while you are in school. Then you subtract your expenses from your income to see if you will need to make adjustments. If you discover that you may be spending more than your income, you may want to go through your expenses just to decide what you really need versus what you want. I will use myself as an example. I need a cup of coffee in the morning. What I want is a Starbucks cold brew at about $4 a cup. If I drink just 1 cup of coffee a day, that will cost me over $1,400 a year for 1 cup of coffee. By switching to a $2 McDonald's iced coffee, I could save over $700. Try reviewing your expenses to determine where you might be able to save some money. For example, could you commute to FIT from home? That could save you thousands of dollars over 4 years. If you decide that you don't need as much of your loan as you thought, email fitloans@fitnyc.edu. That's FITLOANS@fitnyc.edu from your FIT email to ask us to reduce or cancel your loan. The reason we suggest that you reduce your loan, if possible, is that you are going to have to repay the loan. Repayment will begin after you graduate or drop below 6 credits. You will need to complete an exit or repayment counseling session. The goal of this session is to show you how much you have borrowed in Stafford loans, to explain the different repayment plans available to you, and to let you know your options should you have problems repaying your loans. Many lenders give you 1 6-month grace period before you go into repayment. If you have a private student loan, contact your lender to confirm that what their grace period is. During this time, you will need to choose your repayment plan for your Stafford loans, but you are allowed to change your repayment plan anytime if your situation changes. Just a reminder to try to pay the accrued interest on your unsubsidized Stafford plus or private student loans before you go into repayment, or it will be added to your principal. Knowledge really is power, as it helps to make better decisions. Please feel free to take a picture of this slide, as we have included information about who to contact and where to go if you have any loan questions. Thank you for attending our session. If you have any questions for us, please send them via your FIT email to fitloans@fitnyc.edu. Have a great year.